They raised the rates like they did a year and a half ago.
Yeah.
I mean, we went from 3 to 8, but bounced around 7 to 8 range. I mean, at that time, looking forward, I thought we're going to adjust maybe 20%. You either have to have income go up, you have to have lower interest rates, or you have to have lower prices. So that's what we've been struggling with for the last 2 years is affordability. And that's what the Fed tried to solve by raising rates to get values tapped down a little bit.
They had to slow it down. They had to completely slow it down. Obviously, inflation. And,
Exactly.
Yeah.
Values haven't really dropped much since they did that.
Yeah.
So affordability is still a major issue.
So, Bob, thank you so much for coming in.
Thanks for having me, Pete.
Yeah, really appreciate it. So I'm going to go ahead and just introduce to the viewers who you are, what you do.
Sure.
So you've been an appraiser here in Shasta County for a little over 20 years.
You betcha.
Yeah, and I didn't know this about you, but before that, you were in lending.
Yes.
You've also built quite a few spec homes.
Correct.
Yep, and you're also an investor as well.
Correct.
Yeah, it looks like you really enjoy the apartment complexes.
Yes. Started out with single families and worked the way up to apartments.
Nice.
Yeah.
That's awesome.
Yeah.
We might get into that a little bit. Yeah. And then your current projects, finding business in this market, and maybe finding some deals in this market.
Right.
Yeah.
Tough market the past year.
Yeah. You love to travel.
Yes.
Which is awesome. I call you often, and you're in some other country on a cruise somewhere.
Yeah, we do a bit.
Yeah. You love to play golf.
Yes.
And your goal is to visit everywhere in the world.
Yes.
Awesome. And then let's see, topics of interest. We'll just see where it goes.
Sure.
Yeah.
Absolutely.
So where haven't you been?
We had a trip to China and Japan that was canceled because of COVID, so that's one place we want to go to.
Wow.
We've been to Africa a couple times, but we haven't been to the Serengeti portion of Africa yet.
Yeah.
During COVID, another trip that we had to cancel was India.
Oh, wow.
Yeah.
So you got Africa. You want to go to Tanzania.
Yes.
Got it. You've been to Africa other parts
A couple
of it.
times, yeah.
Got it. Where in Africa?
We've been up in the north in Tangier, and then we've been down at Cape Town and around the Horn there.
Wow.
Yeah.
What's your most favorite place you've been to?
Ooh, as far as favorite, there's one place that we said if we ever said we left the United States, we'd live, and that'd be New Zealand. We've been there a couple times. Love New Zealand. Yeah.
I've never been to New Zealand.
Yeah.
But my sister lived there for, I don't know, 15 years.
Really?
Yeah, in Auckland.
That's awesome. Yeah.
Yeah, Auckland, New Zealand. Yeah.
Wow.
So she just moved back to Indiana, and she's got 5 kids, and they all have little Kiwi accents. It's pretty cool.
Did she love it?
Yeah, she liked it a lot. They moved back because COVID was really hard for them.
Yeah, they locked them down completely.
Yeah, they cracked down. It was really hard for her to go to the market.
Oh, jeez.
You know, so they wanted to come back closer to family. Her husband's family lives there.
Gotcha.
Yeah. So.
Yeah.
But no, I was supposed to go to their wedding, and I'm ashamed that I didn't.
Oh.
At the time, I wasn't doing very well. It was in 2009. Just went through bankruptcy, and I, couldn't afford it at the time. But I should have just made it happen.
Yeah. Too bad.
Yeah. But no, that's awesome. New Zealand. That's great.
Yeah.
Cool. Well, I have some questions here.
Sure.
And it's a very interesting market that we're in, and I really appreciate you coming on. So most of our listeners, my goal for this channel, this podcast, is to really help a lot of first-time buyers understand the process, but also help existing homeowners navigate all the ins and outs of each market, help them to be a really successful homeowner.
Mm-hmm.
And so that's the goal. And you are a very well-known appraiser in Redding and Shasta County, and you've been around for a very long time. And so you have a really good pulse on the market, really good pulse with home values. So there's some questions that I wrote down. I know we talked a little bit about some more questions. So I'm just going to go ahead and get into the first one. So how do appraisers account for this has to do with, features of a home. How do appraisers account for unique features of a home when determining its value, and what key factors are most influential in this assessment?
So when we go do an appraisal, you go out in whatever neighborhood it is. Your goal is to find 3 similar sales in that immediate neighborhood that are similar size and quality. That'd
Yeah.
make it easy.
Yeah.
You probably wouldn't need an appraisal if it was that easy.
Yeah.
So hopefully you find 1 or 2 and then go to a like neighborhood to find a similar situation. Different features. If you have a pool, but the sales in your neighborhood don't have pools, well, then you need to go outside the neighborhood to find a similar house with a pool.
Yeah. So that makes a lot of sense. I know a lot of people out there, they're just going to go to Zillow and look at this estimate for their value, for a home value.
Mm-hmm.
How accurate have you found Zillow to be for home value?
I'll be 100% honest. I've never looked at Zillow.
Oh, really?
No.
Really?
Yeah.
Wow. That's interesting.
Doesn't even concern me.
Yeah. Yeah. So not.
I've had people tell me, hey, that came
Yeah.
in pretty close to Zillow, or that was higher, or that was lower.
Yeah.
Zillow's just throwing a dart at the wall.
Yeah.
Sometimes they're going to hit the right number, and other times they're going to be.
Yeah.
I mean, Zillow, they lost $550 million flipping houses when the market was having its highest appreciation year ever. How can anybody lose money in the market back
Wait,
then?
say that again. They lost how much?
$550 million flipping houses in a market that was up 20%.
Oh my gosh, I did not know that.
Yeah,
Really?
yeah.
Wow.
So,
Yeah. Makes sense.
I mean, you go back to 2021, you look at those appreciation numbers,
Yeah.
it was almost impossible to lose money.
Yeah. Yeah. Totally. So we just came out of 2023, and 2021 we had interest rates at like 3%, and 2.5 to 3%. Interest rates over double in 2022.
Right.
And we saw some appreciation in 2022. How did we do for 2023?
So the easiest way to describe 23 is values went up, and stable. They've done everything.
God, in
They are
2023.
They are so unpredictable and hard to figure out, Pete.
Wow.
There was 1 quarter that was up, there was 1 quarter that was down,
Yeah.
and then there was 2 different quarters in there that were not enough to really say it went up or down.
Wow.
Yeah.
Wow.
That's why I'm glad I'm an appraiser,
so
because
pretty
my
stable.
crystal ball doesn't work.
Yeah. So, and that's for Shasta County area, up and
Yes.
down?
Yes, and it's pretty similar throughout the
The
California
county.
area. Yeah.
Oh, in California.
Yeah.
Got it. Okay. And so with that being said, what are some of the reasons why it's been so up and down? What do you think that?
Well, one, when they raised the rates like they did a year and a half ago,
Yeah.
I mean, we went from 3 to 8, but bounced around 7 to 8 range.
Yeah.
I mean, at that time, looking forward, I thought, God, we're going to adjust maybe 20%.
Yeah.
You either have to have income go up, you have to have lower interest rates, or you have to have lower prices.
Yeah.
So that's what we've been struggling with for the last 2 years is affordability. And that's what the Fed tried to solve by raising rates to get values tapped down a little bit.
They had to slow it down. They had to completely slow it down.
And
Because
it-
obviously inflation. And,
Exactly.
Yeah.
Well, values haven't really dropped much since they did that.
Yeah.
So the affordability is still a major issue.
Yeah, still a challenge.
Yeah.
Still a challenge. And we're seeing it on our end, on the lending side.
So a lot more than I would see it on my end.
The
Yeah.
affordability. So I was just looking at these numbers on the MLS, and I was trying to prep a little bit. I went back all the way to 2006, actually I went back 20 years to 2004, 2005, right in that area. And the number of transactions, I'm actually going to pull it up here because I think it's very interesting to look at.
So the number of transactions per month or per year?
Per year.
Per year.
Yep. Yeah. Here it is right here. Yeah, so in 2003, total amount of transactions in Shasta County is 3,031. And it consistently, well, okay, so that was in 2003.
So it went up a little bit.
Yeah, in 2004, 3,200. 2005, 3,300. 2006,
Started to tail off.
2,300
Yeah.
total
And then-
transactions. And then 2,100 and then 1,900.
Yeah.
There's 1,900 total sales in 2008, which was the lowest we've seen in 20 years.
That was those were
1900
some
total.
terrible years for all of us.
So how many do you think we did in 2023?
23, I would guess it to be less than that.
We did 2,300 according to
so-
what I was looking at.
So,
So
not too much
2,300.
different.
Yeah, not too much difference. What's interesting is
You're doing Shasta County or just
Shasta
Reading?
County.
I
Yeah.
was thinking Reading. Okay.
Yeah, Shasta County, sorry.
Okay.
So Shasta County, we did 2,300, which we hadn't done 2,300 total transactions since 2011. 2011, we did, 2011, we did 2,400 transactions. Did a little bit more. We did, in 2010, we did 2,000 total. This is total sales
Right.
on the MLS.
Yeah.
So since 2008, it consistently grew every single year. We didn't have one down year all the way to 2021.
Yeah.
Now, this is number of transactions, number of deals.
Sure.
I used to get confused because I used to thought, well, if the number of transactions are down, then home values are down. That's not the case.
Right. Yeah.
So, yeah, I thought that was interesting. So the year before, we did 3,000 total transactions. So
Yeah.
it was down, I don't know what the percentage is, but 2,300 to 3,000. So it's like 700 less transactions, you know.
As from the appraiser's standpoint, that huge drop off in 07, 08, appraisers still had plenty of business because people were being foreclosed on and those houses need to be appraised.
And you're not having that right now.
Yeah, so you had your business backfilled then.
Because
This
you
time
were
you're not.
appraising the homes that were going back to the bank. They wanted to know
Yes.
the value and everything.
Yes,
Wow.
now we don't have that, which
Yeah.
is good for the people in general,
Yeah.
but
Yeah.
yeah, less business for us.
Yeah. No, that's it's very interesting. It's very interesting. Another thing that I thought was interesting is we had $1.4 billion of total transit volume wise, $1.4 billion in 2021, which is the most we've ever had in total volume. $1.4 billion worth of real estate went back and forth, which is a lot of commissions.
Yeah.
You know, it's a lot of money circulating out in the economy. You know, and so last year was 926 million, so just shy of $1 billion.
Yeah, you'd take the realtors' commissions, the loan officers, the appraisers, the title companies, the home inspectors. That's a ton of money not circulating through our economy.
Yeah, and so that money that we all got, I mean, we all, you know, it's all being spread around in the economy, going out to dinners and going out to lunch and doing, you know,
Exactly.
doing all of that.
Yeah.
And all that slows down, and then it also affects local businesses and the cycle.
Yep.
Yeah. So have you seen similar markets to this?
No, this market has been unique.
Yeah.
Yeah, I've been doing the appraising for 23 years, and I was in lending for 20 years before that.
Yeah.
And this market is totally unique.
Yeah.
The fact that interest rates went up so much, so fast, everybody is in extremely good, historically low interest rates.
Yeah.
They don't want to get out.
Yeah. Yeah.
It's like, plus, even if you wanted to, how do you say, okay, we're ready to move from our 1,500 square foot house to a 2,500?
Yeah.
You
Family grows or something.
You can't really do it because of what your payment's going to do.
Yeah. Yeah.
You would know that better than I do. You see it every day, probably.
Yeah. There's a lot of families out there that want to upgrade
Exactly.
or downgrade. The seniors, I think, have a little bit easier time of downgrading because they have the equity that they can figure that out.
Sure.
Most of them. But the ones that need to upgrade, it's very challenging. There's
Yeah.
a lot of people on the fence right now to do that. I just heard a statistic a couple days ago of how much equity the average person has in the U.S. It's about the combined loan to value is about 46% combined loan to value
That's it?
for the U.S. That's it.
Wow.
Meaning there's only 46% of the actual total value of the home that has mortgage or debt on the house.
I would have guessed quite a bit higher than that.
I know, right?
Yeah.
So a lot of people have sitting on tons of equity.
Wow.
So if interest rates do come back down, I think, you'll be much busier. We all will be busier.
I would think so.
I think a lot of people will start to access that money to pay off all the credit cards they've been using.
Yeah, exactly.
Yeah. So no, that's. I thought that was interesting. Okay, so next question here. As an appraiser, you're seeing lots of homes, and you come across many different types of properties. What happens when someone wants to buy a house, and when you go out to appraise a home, and you're not really looking at the purchase price. I mean, you are a little bit, but it might come in less than what they're buying it for.
It's possible.
Yeah.
Yes.
And so in instances where a home's appraisal comes in lower than the offer price. So if someone's making an offer, and let's say they're offering $350, and the home you go out to appraise it and it comes in less, what are the typical next steps for buyers, and how can they navigate this situation effectively?
So there's a couple different options. One, you need to look at it with your realtor.
Yeah.
And okay, is that a good appraisal?
Yeah.
Are the comps truly similar?
Yeah.
Do we have some unique features on this house
Yeah.
that the appraiser may not have taken into account?
Yeah.
If the house was really improved to the point that it was better than the ones in the neighborhood, did they find something outside the neighborhood? And if the answer to that is no, these comps look pretty good, well, then it's time to negotiate a better price.
Right.
If you look at it and say, well, look, this house and this house are the same and they sold at the correct number, then maybe the appraiser needs to take a second look.
Yeah.
And that's where I think, what you guys call it, an ROV, reconsideration of value?
Reconsideration of value. And I've only done a few of those in the
Yeah.
last couple of years.
Yeah.
With homes.
And generally, the appraiser, they know what the purchase price is. They have the contract, so they're really focused on, is there comps to support that?
Yeah.
So they've really done their homework most of the time.
Yeah. So just for the viewers, what a reconsideration of value is basically when the lender, if I get an appraisal that comes in light, I'm going to look at it, and I'm not going to do a reconsideration of value. In fact, most of the time I don't. And because I'm going to look at the comps that the appraiser used and see what they used. If I see another home, or if I know other information that wasn't on there, or maybe the square footage might be necessarily not correct somehow.
Right.
I've only done a few of them, and the appraisal system is actually pretty good, the way you guys are trained.
Yeah.
So with looking at recent similar homes, and there are some times where it can be somewhat subjective.
Absolutely.
And so that's the part I'm not, that's the part that I'm not quite versed in, as far as how far you can be subjective with an appraisal.
Well, the square footage obviously it's a fact.
Yeah.
Where the house is a fact.
Yeah.
The year built is a fact. The rooms, So where the ambiguity may come in is how much is the house improved?
Yeah. It's the upgrades of
Yeah.
the house.
Yeah.
And can you find a similar with the same amount of upgrades than what the house that you're looking at?
Exactly.
Yeah.
Exactly.
Yeah. And then you can make an adjustment for those specific upgrades.
Yeah.
Yeah.
A lot of times, Pete, we know what we're hoping for before we even go out there.
Yeah.
And if we see a contract, I say we, most appraisers, not everybody, we're all different. But if I see a contract that seems out of line, on my way out there, I'm giving the realtor a call and just asking, how'd you price it?
Yeah.
Why is this one higher than the others? So
Yeah.
give them a chance to involve it.
And then
I almost never get an ROV because I've already talked to them and tried to find out.
Right. Which is a sign of a very good appraiser.
Thank you.
That's why we love working with you. So market stability and future projections. I know we don't have a crystal ball. Considering the current market dynamics, with it being a little bit volatile up, and what are your projections for the real estate market in the near future? Are there areas in Shasta County at risk for a value decline due to market saturation?
What do you mean by market saturation?
Shasta County at risk of value decline due to market saturation. I think
Too many listings?
yeah. Well, we don't really have a lot of listings,
Right.
That's actually not a very good question because we
Well,
don't really have.
it's a bigger question on where do you think values are, and we're coming into a period where the Fed is pretty much telegraphed. Maybe not in March, but maybe May. He's going to start lowering them.
Yeah.
And I don't think it's going to help a lot in the big picture long term. However, in the short period, I mean, every time, if he lowers it a quarter point 4 times in a row, that's that many people that are going to get off the fence.
Correct. Yeah.
And so we'll see a good little bump, I would think, this year when that happens. Yeah.
I would agree. I would agree with what you're saying. What you're saying is if they do lower the rates, if the rates do come down, the affordability to get better.
Yes.
And there is quite a bit of demand of people that need housing.
Exactly.
We need there's a lot of the average first-time home buyer age is about 36, and there's a lot of them. There's a lot of millennials, 30 to 36 years old. There's a lot of them that need housing, and affordability is a big challenge.
Yes. You know what, though? Affordability has always been a challenge. I remember when I first bought a house, and
good point.
You've bought many houses in your life.
Yeah.
Did you ever buy it based on what the interest rate was? It was more of a life change.
Correct.
It's like,
That's
okay,
true.
I can afford a house now, I'm going to buy it. Or I got married and we're having a kid and I want to buy a house.
Yeah, that's true.
The interest rate determined how much house you could buy, not if you could buy a house.
Yeah, it's very true. When I bought my first house, I was a first-time buyer. It was so scary.
Yeah,
It was very scary.
Yeah.
I was 21 years old. I was living with my parents, and my parents were like, "You're making some good money." I was working at Verizon Wireless at the time, and I was making like 20, 25 bucks an hour at the time. And they're like, "You need to buy a house." I was like, "Okay." Well, I hadn't ever paid for rent or anything, and my mortgage, I was making like $2,500 a month was my income. My mortgage payment was like $1,200. I was so scared. I was like, but I did it. Like I kind of took a little bit of a, leap. I did it, but you know what happened is my income continued to increase over time. Interest rates dropped, so like a year later, I refinanced and I got my payment down like $900 and something a month.
Yeah.
And so it just got easier over time.
It got easier and easier.
And that's the thing that first-time buyers, sometimes it's hard to look at that because it's a fixed payment, and if I was to continue to rent, that rent is going to continue to go up every single year.
Right.
As a mortgage payment, it was fixed.
Yeah, I was reading an article and having a discussion, and we were, I wouldn't say making fun of the younger generation, but commenting how they whine about affordability.
Yeah.
And we were like, you know what? When we were that age,
That's so true.
we had the exact same debt to income ratios as they did.
Wow.
One thing that was pointed out, though, that's kind of unique for them, we didn't have $5 coffees and $50 lunches and things like that.
Yes. Yeah.
So it is harder on them.
Yeah.
But
That's
those
true.
are things you can cut back and make it happen.
Yeah. 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 Absolutely. The whole inflation things, with the cost of groceries and the cost of everything else, it's hard.
Yeah,
It really is.
absolutely.
It's really hard. So the broad answer to that question is what I'm hearing you say is that you don't really see anything much change other than it could improve, when rates do come back down.
I would that would be what I would think.
Yeah.
Yes.
And we haven't seen. I honestly, so like I don't know the numbers for Shasta County, and what you're saying is pretty much flat across the board for last year.
Yeah.
But I know nationwide for last year, we're probably going to be around 5% nationwide appreciation, 5 to 6%.
For this 24?
2023.
23.
Yeah.
Okay, for 23, yeah.
We just got the numbers from Black Knight showing appreciation for December was 0.1%, 10.1% for the month. So for the year ended up at like around 5%, 5 to 6%, depending on if it's CoreLogic.
I mean, you did see CoreLogic's prediction for Reading for 24.
I saw that. You saw that too.
Isn't that nice?
Yeah. So Reading
makes you feel good.
Yeah, Reading. Yeah, we were number one on the list for CoreLogic prediction of 7%. Do you agree with that?
Yeah. I can see that happening by June and then being flat the rest of the year. Who knows? I mean, 5 to 7% can happen in a heartbeat.
Yeah.
And it does happen in a heartbeat. Usually appreciation or depreciation happen in chunks, but then we amortize it out over a monthly period.
Correct. So like in January of 2023, real estate declined like nationwide. It declined like 0.1%. Mm-hmm. But normally it slows down anyway in the winter months.
Yeah, absolutely.
Yeah.
Yeah.
But like what you're saying in the spring and summer, I mean, it just shot up like crazy,
right?
And did really well.
Yeah, and we could see that 5 to 7% happen in a 3-month period.
Yeah, I
That's why it's never good to try to time the market.
So true, so true. I'm working on a document right now that I can give out. It shows you if you invested for 10 years from 1941. And every year, if you bought a house for $100,000, it's just $100,000. If you bought a house for $100,000, I'll put it up in this link. But bought a house for $100,000 in 1941. What was your return in 10 years? In 1942, what was your return in 10 years? Every single year, except for 1 year in 2000. If you bought a house in 2006 for $100,000 and you sold 10 years later, you'd have $97,000. Mm-hmm. So
that's pretty close.
Pretty close. So
and that was a terrible year.
Terrible time to buy, but 10 years later, it was only $3,000. That was the only year that you didn't turn a profit. Every other year, and it was like 100%, 200%, 250%.
And if you took into account the interest rate write-off and the taxes and things, you probably came out ahead anyway.
It's true. Very true. Yeah. Very, very, very true. Yeah. So speaking of investment, I do want to ask you. So what do you look for when you are looking for a good investment or a good apartment complex? What's some of the things that you like and are looking for?
When we first started buying single family residences, we were looking for 3 and 2s that were in the lower end because we could only afford so much. And so what we would do is we'd saved a little bit of money, so we had enough to put a down payment. But then we wanted the loan for 15 years.
Get it paid off.
We never took out we've never taken out a 30-year mortgage.
Really?
Yeah.
Really?
We always want to get things paid off quicker.
Yeah.
So you start building equity a lot quicker that way.
Yeah.
And then, as values go up, whatever they may go up, 5 or 10% a year, you're getting to see a lot more of that.
So what I heard you say is when you looked for an investment, you made sure that on a 15-year term that home could cash flow.
Yes, we weren't looking to make money.
Yeah, you weren't looking to make money.
As long as it come within $100,
Yeah.
And as we got older and had more income, then it didn't even have to come that close. But as long as it could pretty much flat
pay for itself.
Yeah.
15 years it gets paid off.
Yeah.
And that is one big secret that a lot of people don't necessarily know is amortization. Amortization on that mortgage is huge.
Yeah.
Over time, it's just over time that thing's getting paid down.
Exactly.
And so that's cool. That's awesome. 15-year mortgages. So are you still buying single family or?
No, we haven't bought a single family in quite a few years. About probably our last one we got rid of was about 7 years ago. Rolled it into apartments.
Got it. Yeah.
So right now we have a 12-unit, an 18-unit, and a 4-unit.
Okay. Yeah. The multi-units are like just completely different game altogether.
They are, especially when you go above, I think it's either 16 or 18, that number, you have to have
Yeah.
an on-site property manager.
Yeah.
I know that kind of freaked us out the first time we were like, oh
Yeah.
God, how's this going to work? And what,
Yeah.
that was a little
Yeah.
scary. But,
Yeah.
yeah.
Yeah. So are you looking right now for deals, investments?
No, we're pretty good where we're
Yeah.
at.
Good.
Yeah.
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 That's awesome. So I got a few more questions here for you.
Sure.
So a lot of customers right now, or a lot of homeowners, they might be in their home and they can't upgrade or maybe downgrade, but they may want to do some home improvements.
Sure.
What would be, your recommendation to focus on to make sure they're getting the value back out of that house and what they're improving on?
Obviously, the most important thing is the kitchen.
Kitchen.
Yeah.
Okay.
And then the bathrooms after that.
Kitchen and bathroom.
That being said, a roof obviously needs to be upgraded. That's
Yeah.
more of a maintenance thing in my mind.
Yeah.
Paint, roof,
Yeah.
you upgrade the windows when they need to be.
Yeah.
But if you're trying to step it up and get the most,
Yeah.
then yeah.
Yeah. So kitchen, you get the most amount of appraised value in the kitchen.
Correct.
Why adding a bedroom, does that not help with why kitchens and bathrooms?
As far as versus a bedroom?
Yeah.
Because a bedroom is already reflected in the square footage.
Got it.
So whether you make a den a bedroom or you cut out a family room and make it an extra bedroom,
Yeah.
that might be logical for someone that's looking at using it as a rental and they can
Yeah.
get more rental income for a 4-bedroom
Yeah.
versus a
I
3-bedroom.
see.
But a family, I mean, you going to pay more for a 4-bedroom without a family room, or do you want that family room? Personally, I'll take the family room.
Totally.
Yeah.
Yeah.
But some people have more kids and they want that.
Yeah.
So it all balances out in the square footage for those
Makes
kind of
sense.
things. Yeah.
So this is another question that I didn't have listed down, but it just came up. Is ADUs are starting to become more and more popular. ADUs, and if someone wants to do a new ADU and put it in their house, how does the value work out with an ADU?
So again, it's back to appraisers don't set values. We're just reflecting what the market gives us.
Yeah, which is what
Yeah.
That's the question. So like does an ADU, if let's say I put a new ADU in for $100,000, are you seeing where that could increase the value of $100,000, or do you think or is it hard to get the dollar for dollar like a pool?
It's super hard to get dollar for dollar.
Yeah.
However, I've seen some nice ADUs built that I've seen $100,000 adjustments on the appraisal.
Really?
Yeah.
Yeah.
But those are nice. The square footage might be low, but they're spending $150,000 to get those things built.
Yeah.
So
I've seen some nice ones too.
yeah.
I learned this. I learned this through working with a couple customers. Is I learned that a lot of people think, this is what I thought too. If I add square footage like to an ADU, I can't include that square footage in the total square footage of the home.
Correct.
So in other words, if I have an ADU that's 500 square feet and my house is 2,500, I don't have a 3,000 square foot home.
100% correct.
Yeah, and I have a 2,500 square foot home, and I have an ADU, and then the appraiser or you will go out and find other comparables with another ADU.
Exactly.
That's trying to find a 2,500 square foot home.
Exactly. And that
Yeah.
applies even if the ADU is attached to the house.
Even if it's attached.
If you have to leave the house and go through the outdoors or a garage to get to something
Yeah.
that's
It's
separate,
detached.
then it's
Detached.
separate. Yeah.
Got it.
Yeah.
Wow. Yeah, and it's burned some, like I've had experiences where it's hurt quite a few, like not a lot, but like, it's hurt some people because they put all this money into thinking they have the value, but the value really is not there.
Right. It doesn't add quite the same as if the house was expanded.
Yeah. Yeah, no, ADUs are super popular, and I know a lot, that's going to be it's a big topic there.
Right. Yeah.
Yeah. Cool. And then let's see, what else do I have for you? Let's see. Oh, what do you think about like like, is there a correlation between Reading or let's say Cottonwood or Anderson as far as trends, like the outlying areas? Do you see trends up or down in other areas, like in Shasta County?
Not as far as like Palisadro, Anderson, Cottonwood.
Yeah.
They seem to be pretty much in tandem with the ups and
county,
downs
with
of
the
Reading. Shasta Lake is a little different.
Okay.
It rose more than
Shasta Lake did?
because their values were so low,
Oh, got it. Okay.
but it got crazy, and they've had a terrible couple years where Reading has been kind of flat the last year and a half, 2 years.
Yeah.
They've taken a quite a hit.
Got it.
Yeah.
Shasta Lake.
Yeah.
Why do you think that is? Just
I think they got overpriced.
Yeah.
I mean, when you're buying a starter home for $300,000 in Shasta Lake, it just didn't make sense.
During, 2020, 2020, it's like if you find a house, you got to buy it.
Right.
Yeah.
Yeah.
Makes sense.
Yeah. And so the values just ran up, you know.
Yeah.
People were looking, okay, an 1,100 square foot house in Reading is $325 to $350.
Yeah.
I can get one in Shasta Lake, but I only have to pay $300. Well, that's still too much, or it should have been too much.
Yeah.
Now those numbers have backed up
Makes sense.
a solid 25 to 50 grand.
Wow.
Yeah.
Okay. One of my last questions is insurance has been going up a lot, homeowners insurance, buyer insurance, and also utilities. So I know the city of Reading just raised their prices or are going to be raising their prices. Do you see that affecting the demand in the outlying areas or with insurance, or are you seeing, not much difference in home values? I mean, it's pretty.
After the car fire, the amount of sales on acreage on the west side went down tremendously. The values were pretty soft.
After the fire?
After the fire.
Really?
Yeah.
Really?
And so lately we've started to see more sales out there despite the high interest rates.
Okay.
But like if you were out in the Grant School District in those nice neighborhoods, those were some of the higher values in town.
Yeah.
Well, actually, when I was running numbers last year, some of the in-town neighborhoods were even more than those neighborhoods.
Wow.
Because of all the things you mentioned.
Insurance. And,
Yeah. It's kind of balanced itself out now, and people expect to pay higher insurance. And it seems like a lot of the buyers out there now are coming from out of town and have a little more money and can afford those increased expenses.
Okay, cool. Well, that's very helpful. Very helpful to know. Yeah. So, any other topics or anything else that you think would be valuable for the listeners, first-time buyers or existing homeowners in this market?
As far as for buyers, if they're buying a fixer house or existing homeowners, question I get a bit, and I imagine you probably get quite a bit, is someone thinking about remodeling their house.
Yeah.
You're not that you're stuck in your house, but it's hard to move up now.
Right.
So you're thinking about remodeling, and it's like, Pete, if I put $25,000 into this, am I going to get it out?
Yeah.
If I put $100,000 into it, well, that's where appraisers look at the sales in the neighborhood. Well, $25,000, that's pretty easy to get out. Most people want to put new countertops and carpet and fixtures and make their house look nice.
Yeah.
Plenty of sales to support those kind of
the
numbers.
higher. Okay, that's super awesome. That's super helpful.
Yeah. You're putting $100,000 in.
Different.
If you're going to be selling, if you're doing it for yourself, that's great,
Yeah.
But if you're going to be selling in a couple of years, you want to make sure you're going to come pretty close to recouping.
Yeah.
Then you need to be talking to your realtor or an appraiser, and it's like, is there sales that support it in like neighborhoods?
Yeah.
Maybe nobody's done that in your neighborhood that's sold that put $100,000 in and recouped it.
Right.
But if you can go to a semi-identical neighborhood and, here's the same size house, they did it and they were able to sell it and recoup it.
Yeah.
That's what appraisers are looking for when you're doing those unique houses.
That's a great point. So essentially what you're saying is if you're a homeowner and you got some equity or you maybe got an equity line or something, you want to make some improvements to the house, if it's 25, you're doing, like flooring or countertops, kitchen related stuff. It's pretty, what you're saying is pretty easy to get that extra 25, 30K out of the house.
Yeah.
But what you're talking about is, if you want to do a complete gut of the kitchen.
If you're going in and you're putting highly custom cabinets, if you're tearing up the ceiling and putting beams in, you're doing all kinds of cool things like that. Does the neighborhood support it?
Yeah. And so basically talk to your realtor.
Yeah.
Talk to an appraiser or someone to see if there's supporting comparables to get to that. Yeah, it's super helpful. There's a lot of people that do overspend,
Yes.
including myself. I did that. I kind of knew what I was getting into.
But it's for you.
Well, it was, my situation, I was a little bit pot committed. I gutted the house, not talking or thinking anything, and then I had to rebuild it. I can't sell a house when it's gutted.
No.
So one tip for the listeners, if you have a house, you gut it, it's going to be very difficult for you to sell the house.
You're only, cash buyers are the only ones that can buy.
Cash buyers, yeah.
And they don't buy things for market.
Right, exactly. That's what I was talking. I was pot committed, so I had to go all the way, and it ended up turning out nice.
You got a cool house. It's a fun one.
Yeah. So okay, and then let's see. Anything else? That was a good topic. Yeah, super. Oh, I got another one. Solar. I know solar's. They just made some changes with solar, but if someone's wanting to put, a $50,000 solar system on their house, what is your recommendation?
So, solar system, $50,000. What the appraiser is looking at is, okay, they paid $50,000. They are generally going to get back 20 to 30% rebates and tax benefits. So their net cost is probably going to be $30,000. Okay, you're probably going to see about half of that as an adjustment on the appraisal. So then it'll be a $15,000 adjustment.
So I'm thinking about solar. I get people knocking on my door saying, you need to get solar. Save $400 a month on your utilities, $600 a month. It's a big number to save every month. But if I think I'm going to sell that house in the next 2 years, 3 years, do I do it?
I would have to run the numbers. I would think not, but I'm sure the solar salesman can come up with a few reasons why.
Yeah, I can tell you my experience. For me personally, and I'm not saying for anyone else, but personally, I almost put solar on a house in Reading. It was on Cumberland. I still have the house, so and it was, I was going to save $400 or $500. Maybe I should have done it because I still own the house. That was like 5 years ago. But I thought I was going to sell, so I just ran the numbers, and I wasn't going to get out. If I was going to sell the house, then that's why I decided not to do it.
You know what scares me a little bit is the maintenance
On the solar?
Yeah.
Oh.
I'm sure they're not maintenance free. Is anything you own maintenance free?
Right. Yeah.
And who repairs it? Can you get them out there? Are they going to be bankrupt in 5 years?
Yeah.
I've heard a lot of horror stories.
Wow.
Yeah.
Yes.
That's not anything against solar.
Yeah.
But
yeah, no, solar's. I mean, there's a lot of viewers that are. I'm sure there's a lot of people thinking about solar still, and I think that
if I lived on acreage like you do, I would have solar.
Yeah. I bought my house with solar, so I didn't pay for it. So which is another good thing, Or if you're out in the market and you find a house with solar,
you get a good value.
You're getting a good value because what you're saying, it might be a $50,000 system.
You're paying probably $15,000 for.
I have a first-time buyer right now. She's in contract on a house in Anderson, and it has solar. Previous owners, it was like $30-something thousand for the solar, and she's buying it. And she's getting the solar with it, and it's she's not paying $30,000 for the solar.
No, not even close. Yeah. So, good value if you can find the house with it, and you like the positioning of the solar.
Yeah.
Personally, I don't particularly like pulling up to the front of a house. If your house faces south, and you have to put it on the front of your house, and
aesthetically.
Exactly.
Yeah.
And we spend money to make our house look pretty, but then we're going to put
these big metal things.
Yeah.
Yeah. Well, Bob, I really appreciate your time and coming in. I think the local community is going to get a lot out of this, of what we talked about.
Good. That was great. It was fun.
Yeah. So one thing for Bob, you do, like, you do appraisals not just for banks, but also for anyone that needs to get a value. So if
Yes.
someone needed to get a value, do you mind if I share your information?
That'd be great.
Yeah.
Yeah. No, the past year and a half, Pete, probably close to 50% of our business has been non-lender.
Wow. So that's just people needing to get an appraisal where they're
Right.
probate something.
Yeah,
or
exactly.
potentially
Estate,
divorce or
probate,
something.
divorce.
Yeah.
We do a bit of pre-listing.
Yeah.
You know,
Okay.
yeah.
Perfect.
Some cash purchases.
Well, I'll put Bob's information in the comments below so they can
Appreciate
reach
it.
out to you.
Yes.
Yeah.
Yeah.
Cool.
That's great.
Thanks a lot, Bob. Really appreciate it.
Thank you.
Yeah.